Let's start with miners. I saw that miners are now starting to put out their June reports, and a couple of miners have reported that they've sold not just a little bit of the Bitcoin on their balance sheet, but quite a bit. Explain what's going on here and why exactly are they doing this?
Yeah, so for regular listeners of the show, people that have subscribed to some of my work, whether it's on Twitter or just what we cover at Bitcoin Magazine Pro, we've talked about the cyclicality of the Bitcoin mining industry and these kind of hash price bull and bear cycles. So you can think of hash price, it's miner revenue divided by hash rate. So when a good kind of basic gauge or kind of a mental framework to operate on is when price is increasing faster than hash rate. Miners, their valuations, their margins are all increasing. And when hash rate is increasing faster than price, or if price is just decreasing and hash rate steady, or hash rate, the pain trade is hash rates increasing, price is decreasing, these miner margins really, really get squeezed, and the ASIC values, and it leads to some of this kind of forced selling. And we see it every single cycle. And this cycle, I think, was even exacerbated by the fact that we have these new kind of public markets and the financing around that. So these miners like Hut 8, a lot of these publicly traded firms, we have a graphic up here. This is the performance of all these publicly traded miners since the all-time high of Bitcoin. And they've all underperformed Bitcoin itself. And there's a reason for that. Post-China miner ban, a bunch of hash rate got wiped out. A lot of these companies scooped up a ton of rigs, and they did it with financing, they did it with leverage. So now that the price of Bitcoin has gone down, hash rate has subsequently recovered, meaning that the difficulty has adjusted upwards. For anyone that's kind of not familiar with the term difficulty, Bitcoin mining has this kind of, it's like this oscillator. And if more and more people are mining Bitcoin, if more and more operations are turning on, it gets harder and harder to mine a block of Bitcoin. So, the other way is that if hash rate's going down, difficulty adjusts downwards to kind of ease up a little bit. And so since, all that difficulty has just continued to ratchet up, it's getting harder and harder to mine Bitcoin, more costly rather, at the same time that price is falling. So you're seeing a lot of these operations start to puke up and cover their loans. And that's leading to just kind of cratering valuations and equity market performance.
So when you see this happening, is this something that we'll understand when it's over? And we'll be like, okay, that's probably, they've sold everything that they're going to sell. Is there a percentage of their balance sheet? Is there some way to evaluate it in real time? And the thought process being with liquidations, we know of some because of on-chain analytics, or we're able to understand, from past maybe company announcements, hey, what is the general price point at which some of these liquidations will happen? And also, what is the size of it? Now, we don't understand all of them, but these are publicly traded companies. And so how do you evaluate, how much Bitcoin is there available for them to sell? And how do you know when they're kind of done selling? Or is it just all after the fact we'll be able to understand that?
Yeah, so there is some pretty good data out there about kind of approximate break-even levels. A lot of these publicly traded miners still have break-even prices below 10,000. But those numbers actually ratchet up as hash rate continues to ratchet up and difficulty continues to increase. So my kind of base case is that we see a new all-time low in hash price, right? So that miner revenue divided by hash rate, and basically the all-time history, or the trend in Bitcoin is hash prices going lower forever, essentially. And what you see are during these bull markets, there's these gold rush periods where price dramatically outperforms hash rate, and it's so hard to actually source and engineer these new ASIC machines and get them out and get them plugged in. The infrastructure takes a lot of time. So there is a lag between kind of that bull market, that golden period of profitability, and where these miners really get squeezed. But you've seen it cycle after cycle. And I think what you're really, what to look for is you can monitor the hash rate, you can monitor the kind of the moving averages of the rate of change of that hash rate. When you see a lot of that's really start to fall off, that basically means that a lot of these miners, these operations are seeing kind of immense pressure. But the beauty of Bitcoin is these machines don't just turn off forever. They're sold, they're liquidated. The inefficient miners have to sell their holdings, and what happens? Someone else with a cheaper power source, cheaper energy, and better, more well capitalized, they scoop up the miners, they plug them in, and they continue to hash. And they also get the benefit of difficulty ratcheting down, right? So I think there is still a period ahead of us where these miners are really going to get squeezed. They're going to have to be selling a majority of their stack. There's no longer a period where miner margins, their profit margins were 80, 90% in the bull market. And because of that, they had just absolutely tremendously outrageous valuations. That period is over, and it's kind of really just every man for themselves at this point. Some publicly traded miners, I believe, probably won't make it to the other side, or they'll be acquired. And some will continue to thrive. They'll continue to build, and they'll be tremendous performers during the next bull cycle. But I think that takes time.
When you take a look at something like hash price, explain what hash price is to everyone, and then we can pull up this hash price percent from cycle low, and you can explain what this is showing us.
Yeah, so hash price, it's miner revenue, daily miner revenue. So we can see, around approximately 900 Bitcoin per day are mined. And then we can just multiply that out by the current price, and then divided by just average hash rate. So using a daily hash rate isn't really useful because there's so much variance. But just say take a 7-day moving average of hash rate. It's a pretty reliable indicator of where what that rate is, and because of that, we can come up with this hash price, this kind of calculation. And it's a rough estimate, and obviously every miner is different. But this is basically kind of showing you miner profitability, and this is in logarithmic scale. So if you want to zoom in on that chart a little bit. Hash price is basically going down forever in a tremendous fashion. It's almost like the opposite or inverse of the Bitcoin chart as hash rate continues to just increase, and that block subsidy continues to get cut, right? First, there was 50 Bitcoin mined every block, then 25, then 12.5. In May of 2020, that went to 6.25. Somewhere in 2024, that'll go to 3.125. And obviously there's, a variable amount of fees that are being paid to compensate miners as well. But we can see here that these bull markets, right? If we look at the hash price increase from its all-time low during bull markets, this is kind of that gold rush visualized, right? So any capitalized miners that make it through the bear, they rough it out, they're barely profitable, they squeak by, but they're still hashing. During that next bull cycle, that's where they're kind of, that's where you reap the rewards. And so now we're kind of in one of those periods where hash price is just flirting with an all-time low. Its all-time low is around 7 cents per terahash. Right now, it's about 8.6 cents per terahash. So we're going to see another low. It's going to get even kind of squeezier for these miners and their margins. And the strong will survive, but the weak, probably get wiped.